This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. I'm Carol Massar, along with Tim Stenovec, live here at Bloomberg headquarters in New York City. Tim, U.S. government reopening?
Yeah. Is your life different today?
I don't know.
I think a lot of people's are if you live outside the Washington, D.C. area, or if you work for the U.S. government.
You're back at work.
You are back at work.
All right, so we've got that happening. But what we are still awaiting is data, economic data from the U.S. government. We're starting to get little pieces of information about how that data will come to us. But the question is whether that data will be able to really clear the path for another Fed rate cut. Remember, Fed officials meeting for the last time in 2025. That decision in December. Yeah,
December 10th is when we do hear from Fed Chair Jay Powell. So that's the backdrop of our program this afternoon. That's where we're going to begin. We're going to speak with Elizabeth Renter. She's senior economist at NerdWallet. Also, Carol, the sell-off has Wall Street's attention, certainly. Tech stocks taking a real hit today, and we got a great guest talking about that a little later.
All the major indices are hovering near their lows of this session. We've got the Mag 7. They're down about 3% in today's trade. Nvidia, by the way, we have seen about a 10% pullback from its recent high, so we're going to get into all of that. Also, Disney in the dumps. The stock, not so magical among investors. We're going to talk about earnings, the outlook, and the spend for those big movies. Tim, it's a lot.
It's a lot. That's all up over the next hour right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet. Hey, Amy.
All right. Thank you, Tim. And you're absolutely right. There's been a sell-off on Wall Street. Let's talk about that. The historically long government shutdown is over, and you might think that would send stocks higher, but traders are now bracing for a wave of eco data that they've been waiting for because of the government shutdown. And there are some concerns about whether those numbers are going to clear the path for a Fed rate cut next month. We do check those numbers. We check the markets for you all day long here at Bloomberg. The S&P 500 down 1.6%. NASDAQ down nearly 2.5%. The Dow down 1.3%. The 10-year Treasury yield at 4.09%. The 2-year yield at 3.58%. And Fed officials are talking too. Minneapolis Fed President Neil Kashkari says inflation remains too high at roughly 3%. San Francisco Fed President Mary Daly saying that it's too soon to say whether they should lower interest rates in December. She added that she's keeping an open mind. And Cleveland Fed President Beth Hammack says the Fed just should hold rates steady next month. So we're going to continue to follow that for you and how it is impacting the markets. Meanwhile, Tesla says it is working on Apple CarPlay, something consumers have been asking for. Tesla says they'll start the rollout of CarPlay in the coming months. Tesla shares also down. The European Commission investigating Google over concerns it unfairly demotes some news results, which may be violating the bloc's Digital Markets Act. Google calls that investigation misguided. Google parent Alphabet shares also down about 3%. And Boeing Defense Union workers, they just accepted a new contract. Their 102-day-long strike is over. Members in the St. Louis area getting back to work starting November 16th. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, great stuff. Amy, thank you so much. Amy Morris in for Charlie Pellet on this Thursday. Well, as you know, we've got a sell-off on Wall Street. Traders bracing for a wave of economic releases after the U.S. government shutdown ended. It has driven, though, stocks and bonds lower on concern on whether the data that we ultimately get from the U.S. government as they play catch up and then start to get back on schedule, whether or not it clears the way for another cut by the U.S. central bank. It's kind of in question right now.
Another thing in question is just what this economy looks like. So we're hearing from different companies and we're hearing different things. The latest, Verizon, discussing plans to announce job cuts across the company next week. This according to people familiar with the plans. The move, a major step in a transformation led by new CEO Dan Schulman. Nonetheless, Carol, it's another example of another big company cutting some jobs.
Yeah, exactly. And then you do have Fed speakers out there. Federal Reserve Bank of San Francisco President Mary Daly said it's too soon to decide whether policymakers should lower interest rates in December. Here's where we are. Let's see what Elizabeth Renter has to say. She's senior economist over at NerdWallet. She's with us from Durham, North Carolina. Hey, Elizabeth, good to be talking with you once again. So what conviction, first of all, do you have in making calls on the U.S. economy, on the U.S. labor market, on inflation?
Hey, well, thanks for having me again. You know, it's tough to make sense of what's going on in the economy right now because the access to data is so limited. We're looking at private data sources and trying to infer what the BLS would have said over the past several weeks, and that's difficult. That's not to say it's brand new, right? Myself and the Fed and economists across the country have been looking at private data sources in addition to federal data sources for some time. We're just having to put more weight on them now than we would have. I do think that
Elizabeth, just want to jump in. What private data sources are the ones to you that are most important? What do you think tells the fullest story?
Yeah, well, I think when it comes to the labor market, there's several great private data sources. So the ADP is a reliable data source, but all of these private data sources have unique caveats. They're measuring slightly different things, and you need to take that into consideration. So ADP misses government jobs entirely. They're more likely to overstate the number of jobs being added to the economy right now because they're not catching federal jobs, for example, which we know is a big item this year entirely in 2025. Then you have a source like Revelio Labs. They're another solid source of labor market data, but they're searching job profiles, professional profiles. So there may be a delay in their data because they're catching, if you're open to work on LinkedIn, for example. Putting all of these together takes a little more work than just looking at the jobs report every month. But I think that's what we have to do in the current environment.
All right. So labor market, just quickly, how do you see it?
Solid, but gradually cooling, which is, I think, in alignment with what Fed Chair Powell said just a couple weeks ago. You know, there is some weakness. Hiring is slow, but the unemployment rate, according to the Cleveland or the Chicago Fed nowcast, remains in that 4.5% range. So not alarming. We are hearing a lot about layoffs in the headlines, but the headlines and what happens in practice or what would have been reflected in the BLS data are two different things.
All right. Inflation. So I want to just point out in an interview with Market Watch published today, Cleveland Fed President Beth Hammack said she's worried market participants might doubt the Fed's commitment to its 2% inflation target if the central bank continues to lower rates. 2%, that target, and then where we are in terms of U.S. inflation, how sticky it is as we get kind of closer to 2%, but not quite there.
Well, I think we can still confidently say that inflation is high. It's above target, but it's not accelerating rapidly. So another source I look to for this one is the Cleveland Fed nowcast. They compiled data from commodity prices and other high frequency sources to estimate where the CPI would be. And it says that, you know, just that inflation is steadily high, but not accelerating. Right now, I think expectations are in alignment. Whether you're asking the Fed or asking consumers, up in the short term is what people anticipate, right? Yeah. Inflation is going to remain above that target, but then come down in the long term. Can
I just ask you, I understand that prices are not going up like they were a year and a half, 2 years ago. I get that. But they're also not going down. And I mean, the reality of kind of what we're all paying for things, is this just it? And that's just the way it is? And why does it feel like we are still paying a lot for stuff? And is that a new reality that things are just costing more in today's society?
Well, I think there's several reasons for that. Right now, this year, there are several sources of inflationary pressure, and we're seeing that, or we have seen that up until this point in the inflation data. You know, the impact of tariffs has kind of been trickling in, but also demand for services has kept services inflation high. I think also it's because we're all hyper attuned to it. You know, there's research out there that says after a period of high inflation, we're all going to be extra sensitive to inflation. And I think that also plays a role. We all have our eyes out for it, right? So because inflation is higher than we like, it's going to be particularly painful in light of the recent high inflation period.
Elizabeth, I had an interesting conversation with somebody today about the Federal Reserve and just the idea of Fed independence. And I'm curious about your view on this. Her argument to me was, we're starting to look at monetary policy in the United States that represents not necessarily monetary policy historically in the U.S., but one that's under more political pressure than we've seen, at least in recent years. And to her, it's starting to look like something more out of the developing world where monetary policy is more politically influenced. I'm wondering your view on that.
I don't know if I would take that quite of a bleak look. I mean, I believe the risk is there. You know, I think it was just earlier this week where Bostic came out and said he plans on retiring next year, which opens up another seat on the Fed. And the risk is always there that as an administration has undue influence on who takes a seat at those decision-making tables, there could be more pressure than usual. I do have pretty deep faith in the independence of the Fed and sort of the dedication to independent monetary policy that these people have in these positions. But I do think we have higher risks now than we did, say, a couple years ago.
Yeah, I mean, part of, I think, confusion on maybe the part of investors when they're thinking about the data that's going to come and whether or not it provides conviction for another rate cut come December. The part of it is, I mean, Fed officials themselves are divided, right, on the best path ahead for interest rates due to high inflation and continued weakness in the labor market. So it's a dual mandate. That's tough when both parts of the mandate are tricky right now, right? And maybe create some problems or would determine a different Fed policy for each. And you do wonder that debate and which voices are going to sound the loudest and perhaps have more sway, assuming Fed Chair Jay Powell is among them. But how we need to think about that in the next Fed decision.
Yeah, you're absolutely right. So not only is the data pointing to the dual mandate, sort of the two sides of the dual mandate being at odds, right? We still have high inflation and the labor market is cooling, but neither one of those things are sort of at a tipping point, right? We're not seeing a skyrocketing unemployment rate, and inflation is not at target, but it's not alarmingly high. So it makes sense that there's sort of more gray area and people are going to fall on either side of these decisions a little bit more than they normally would.
What?
I think we got to go.
I think we do. Listen, there's a lot going on. And I guess as the data comes in, we'll ultimately see. It is certainly an interesting time to be talking about the U.S. economy. That is for sure. Hey, Elizabeth, thank you so much. Elizabeth Renter, she's senior economist at NerdWallet, joining us from Durham, North Carolina. All right, that's the latest on the economic backdrop. Let's talk equity markets. We're going to get to Dan Ives, talk about the tech sell-off in just a few minutes, but we got another stock on our radar. Yeah,
another stock that's moving lower. In fact, shares of Disney down about 8%. Shows that it's not so magical, at least today, in the Magic Kingdom. Shares of the Walt Disney Company, rather, down the most since April. This is the company reported sales that fell short of Wall Street estimates and set a slate of big budget films, including the new Avatar picture, Carol, are going to weigh on results for the first quarter of its new fiscal year.
Yeah, it's definitely played out in today's session. Hey, Disney CFO, Chief Financial Officer Hugh Johnston, joined Bloomberg Television earlier today, covered a variety of topics, including a succession plan for the current CEO, Bob Iger.
What the board has indicated is that will take place sometime during the first calendar quarter of 26. We report in next February. Whether that'll be before or after will be up to the board, but we should have it done by the end of March.
All right, that again is Disney CFO Hugh Johnston. As he said, Disney expects to name a successor to Bob Iger by the end of March. Keep in mind, Iger was there for a long time.
One named Bob or not one named Bob?
That's a good point. Oh, that's right.
That's my question.
But
it was Bob followed by Bob followed by Bob.
But okay, Bob Iger there for a long time, considered kind of a mastermind in terms of CEOs and what he did with Disney. Then Bob Chapek came in, and there was a lot of focus, right, on streaming, and then things didn't go
Just reminding everybody about the succession last time
and
around.
Bob Iger came back.
Exactly, okay.
So we'll see whether or not they have to be named Bob. Let's see what our Geetha Ranganathan has to say. She's Bloomberg Intelligence Senior Media Analyst. She's at BI headquarters in Princeton. We're going to talk succession in a moment, whether or not the next CEO, Geetha, has to be named Bob. But more importantly, let's talk about the quarter that was and the outlook that is. What do we need to know about earnings?
Yeah, quarter that was fine. It was pretty much in line with expectations, Carol. I think what really has kind of spooked the street a little bit is guidance. Again, overall guidance for fiscal 2026 seems to be okay. I think really what investors are having a hard time kind of wrapping their heads around is the fact that, fiscal 1Q looks really soft, which means everything is going to get pushed to the back half of fiscal 2026. And I think that's what's causing a lot of the nervousness that we're seeing today.
I want to go right to the successor. Disney board will name a successor to CEO Bob Iger.
Does it have to be named Bob?
Yeah, I mean, well, who's on the short list right now?
Yeah, so I mean, the first big question, Tim, was, is this going to be an external candidate? Is there going to be an internal candidate? So it looks like initially when they started out, it was all 4 internal unit heads that were in the race. So we're talking ESPN's Jimmy Pitaro, we're talking Josh D'Amaro of the Parks, Dana Walden, and Alan Bergman from the studio and content division. It looks like that race has kind of now narrowed down to 2 potential candidates. So we're looking at Dana Walden, who is a creative genius. And of course, you have Josh D'Amaro, who's headed Parks and is a Parks veteran, has an absolutely stellar track record there. So it's kind of going to come down to this eternal question, right? For Disney, the content is the start of everything. It is the source of everything, including, Parks, right? The IP of Parks is all from the movies and all the other creatives that they have going on at film and TV. So again, which one is more important? The last time they had a Parks guy, that didn't go so well. So we'll have to wait and watch.
Yeah, and right, they used to do things. I remember like reporting on Disney, Geetha, and like people would switch jobs, right? The CFO with Parks, I think, or something, as they would kind of like a CEO race, if you will, and let people kind of get another view of the company. Looking at Dana Walden, co-chairman Disney Entertainment, does have a big portfolio.
Jimmy Kimmel, when he spoke to Lucas Shaw earlier this year at Bloomberg Screen Time, Jimmy Kimmel, that is, incredibly complimentary of Dana Walden. Her name came up so much during that interview.
Yeah, that's a really good point. I didn't realize so she's done a lot of interesting things. Handmaid's Tale, Kardashians, Only Murders in the Building. So what does Disney need in your view? You understand this space and kind of how media has continued to evolve and Disney's place within it. And Disney's not just media, but they are media content and kind of just putting it across their platforms. What kind of CEO does Disney need?
They need somebody who can do everything, right? Exactly as what Bob Iger has done. I mean, so these are some really big shoes to fill. I just wonder with kind of, obviously Dana Walden really good at handling talent. You just brought up the Jimmy Kimmel controversy. I mean, you need to be able to have a lot of charisma. You need to be able to kind of work with a lot of these very, very hard personalities in Hollywood. So I think Dana Walden definitely knows her way around there. She obviously has a great reputation, a great track record. But at the same time, when you kind of look at the bread and butter of the business, that is the Parks business. And you have to kind of be an operations geek and an operations nerd to really get the day-to-day running at all of the parks, at all of the cruise ships, the vacations properties. And of course, Josh D'Amaro is the absolute superstar there. So I really wonder whether they actually need to have kind of a co-CEO structure. I mean, we know Netflix has done that pretty successfully. Spotify is looking to do that starting in January. So, I think it could work, but then again, it's also a recipe for disaster sometimes.
Hey, I love that. Maybe, who knows? Maybe we'll find out just in a few months. Before we let you go, in an environment where so many of these large media companies are shedding assets or combining to form new ones or looking to buy more, Disney's assets, is it the right size right now? Does it need to shed any?
I don't think they need to shed anything. If at all something comes up, it's pretty much just the linear TV networks. But that is a smaller and smaller part of the business. As we kind of look at the portfolio, Tim, you just look at the theme parks business along with all of the cruises, and then you put streaming together. Just those two pieces of the business would be close to about 70 to 75% of earnings in fiscal 2026. So really, those are the big drivers in terms of earnings. I don't really think they need to shed anything. But of course, the question is going to keep coming up whether they do need to kind of spin off their cable TV networks.
I love it that it's like, though, comes down to like Parks, like being so important to the company. Hey, Geetha, thank you. Geetha Ranganathan, she's senior media analyst at Bloomberg Intelligence. Shares of Disney down 8.2%. This, as we are seeing selling across the board. You've got the S&P down 1.6%, 2.3% lower on the NASDAQ 100. We're talking tech. That's sell-off. That's next.
2:21 on Wall Street. I'm Amy Morris, and we're still watching the sell-off on Wall Street. Traders bracing for an economic data deluge now that the government shutdown is over, but that is what is driving stocks and bonds lower on concerns over whether the reports will clear a path for the Fed to cut rates in December. We do check those markets for you all day long here at Bloomberg. The S&P 500 now down 1.6%. NASDAQ down nearly 2.5%. The Dow down 1.4%. The 10-year Treasury yield at 4.09%. The 2-year yield at 3.58%. Sources tell Bloomberg Verizon discussing plans now to announce job cuts across the company next week. That would be a major step in a transformation led by new CEO Dan Schulman. The size and scope of the layoffs are still being discussed, but they could affect a significant portion of the workforce. Sources say that reduction could impact up to 15,000 workers. Shares of Verizon about 2% higher. Nvidia underperforming the Magnificent Seven stocks ahead of next week's quarterly report. Shares of Nvidia now 5% lower, just about 5%. Investors remain concerned about the speed of the AI-led rally. Meta, Apple, and Microsoft are all little changed, but Tesla, Alphabet, and Amazon also are all lower. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We go back now to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
And we shall take it. Amy, thank you so much. Amy Morris in for Charlie. All right, so with much of the optimism about the government shutdown and reopening, not optimism about the shutdown. That we weren't optimistic about that, but the reopening, we have seen that kind of already priced into the markets. Talks about exuberance did resurface after that reopening, but we also now are seeing kind of moving beyond that, and we now have kind of a sell-off in high-flying tech giants. You heard Amy talk about it. We keep on it. Under the surface, some market observers pointed to a rotation into more defensive names, and that explains something we've seen over the last couple of days, yesterday and the day before, the Dow Jones Industrial Average hitting a record, and we have not seen that confirmed by other major benchmarks. I feel like it was something, Tim, we all talked about with our TV colleagues too. It's like Dow hitting a record, yet nothing else was.
Yeah, I mean, when Nvidia weighs so much on the NASDAQ and the S&P 500, Nvidia takes a hit like it did earlier this week, like it's doing today. It drags down other things, not the Dow. I want to bring in Dan Ives. He's global head of tech research at Wedbush Securities. He's also chairman of Icahn Holdings. He joins us. This time we find him, where in the world is Dan Ives? He's in Miami today. Dan, first up, the tech sell-off. NASDAQ 100 off close to 4%. That was just since October 29th. Nvidia off 10% since then. Mag 7, the Bloomberg Mag 7 index off close to 6% since then. What's happening here?
Look, I think it's just a white knuckle moment, right? You're seeing the risk off. I mean, worries about valuation, circular deals, OpenAI, and others. But Tim, I mean, in my opinion, it's just another buying opportunity. I mean, this is one where you're going to get these moments. And as we've seen, this is still the early days of AI revolution. It's year 3 of an 8 to 10 year build out. That's why we continue to believe the winners here on sell-offs, Tesla, Nvidia, others, you continue to own, I think, heavy. And I think going into next week, Nvidia earnings is going to be a positive catalyst for tech stocks.
All right. You know what we're going to come back at you with. I mean, this AI trade, Michael Burry and others saying that those Nvidia chips, that they're going to deteriorate faster than big tech is acknowledging and maybe putting out on their balance sheet. And so I guess the read on that is the return on investments, margins, it's going to change and likely be smaller maybe going forward. I mean, is that the case? Do you just say, nope, they've got it wrong?
I mean, I just say, many of them have been calling it the bubble the last few years. Are they in Taiwan, like ourselves, walking through trying to understand demand? Are they in China? Are they talking to customers around the world to understand right now the demand, the supply for?
All right, we're just having a little. Hang on, Dan.
It's very easy to say bubble, but I just don't see it.
Yeah, we just want to make sure we've got a clean signal with you. So we're going to just re-hook up with Dan and just make sure it's nice and clean, because we definitely want to hear what he has to say. In the meantime, we are talking about the tech sell-off that we're seeing here today and how we've seen it kind of over the last couple of days. S&P right now, Tim, down about 1.5%, and right now the NASDAQ 100 down about 2%.
Okay, Dan Ives, I want to bring you back in. The NASDAQ 100 too, down about 2%. Shopify down 7.2%. Tesla down 7%. Palantir down 6%. You say it's another buying opportunity. You say this is not a bubble. I want to let you finish your thought when it comes to Carol's question about that bubble, because we did lose you a little bit. Please continue.
I mean, it's year 3 of an 8 to 10 year build out of AI. And it comes down to me, like as someone like myself that travels to Asia, sees it in Taiwan, sees the demand, the supply. Nvidia chips are 12 to 1. How could you call that a bubble? We are early days in terms of this build, and that continues to be my thesis, and that's why these are buying opportunities.
Maybe some people call it a bubble because of the idea of circular financing, the idea that a company invests in another company to then allow that company they invested in to buy more of that said company's products. You know, this idea that Nvidia gives OpenAI money, OpenAI uses that money to buy stuff from Nvidia. Is that bubbly to you?
It's not. I mean, for every dollar they.
We're having a little bit of a freeze. Maybe we need to buy some of those Nvidia chips. Like,
where's the 6G we've been promised? That's what I'm waiting for.
I don't know. We're hoping we're going to reconnect with Dan Ives because we really want to get his thoughts on all of this. But we were talking about that circular financing. I guess I just wonder, we've seen returns on investment, certainly when we've seen the big hyperscalers, report earnings, although the most recent one, there was concerns about some of the big spend when it came to Meta and others, not necessarily for Alphabet, but we definitely saw it play out for Meta.
Well, I read some of the stocks that were lower today. There are some gainers in the NASDAQ 100. Carol, maybe keep an eye on these. I know you are for your gainers today. Cisco.
Got that
one.
Yep,
that's up. It's leading the pack today, up 4.8% out off of earnings yesterday. We talked about that with Woo Jin Ho. If you missed that, check out our podcast. Verisk Analytics, Biogen, Regeneron, Thomson Reuters. So there are quite a few stocks.
Regeneron is also another one.
In the green today. A lot of biotech stocks in the green.
Well, I'm taking a look at the stocks. So I'm looking at the Philadelphia Semiconductor Index. It's down more than 4% in today's session. There's 30 names in that index. 29 are lower. So nearly all of them are lower. It looks like Texas Instruments is actually up, but just a hair, just barely. And so, there is that question out there. We still talk about AI a lot with companies. I'm just taking a look at the stocks, too, from the July 11th high. And let me just pull it up. Actually, that's Texas Instruments, but we've seen that one come down. But let me go back to Dan Ives. We're just kind of weaving our way here in the markets. Global head of tech research over at Wedbush Securities. Sorry, we keep having troubles with technology. So Tim was asking about some of the names that we're selling. I mean, there are opportunities. What have you been maybe buying in this, recent pullback?
You own Tesla, you own the hyperscale. Look at Oracle, the sell-off here. Look at Meta. I mean, these are golden buying opportunities for the next 2, 3, 4 years. And that's my view where we are in the AI revolution, that you use these as opportunities, not head for the elevators.
So I guess the question that I have, Dan, if this is a buying opportunity, what happens if there's another 10% pullback?
Tim, it's my view. We're talking about NASDAQ 25,000, NASDAQ 30,000.
When?
Next 2, 3 years. So it's my view. Like as we continue to play out, Street's underestimating numbers by 20 or 30% next few years. That's why these are opportunities to own the AI winners on these pullbacks.
Okay, so let's look ahead to Nvidia next week. Dan, you know that they're going to be reporting earnings on Wednesday. It's the king of AI bellwethers, no doubt about it. What do you think, though, we will see? What should we see to give you, the confidence that you're talking about right here with us on this Thursday?
I think demand 20% higher than the Street's expecting the next 12 to 18 months. And that's even without China. And I think when you hear from Jensen, combined with the hyperscaler, combined with what we see with Palantir, this is a CapEx super cycle playing out. That continues to be the thesis.
So you think the pullback that we're seeing, you think it's investors being kind of silly? That like when we see Nvidia, it's close to, I think, about a 10% pullback since late October. That nervousness, normal, wrong? You just think it's wrong, that investors have it wrong?
No. I think it's normal.
Okay.
It's normal when people are calling bubble, valuation, circular financing, right? I mean, we've had a massive run. It's normal, but it's healthy. But it's my view, this is not the end. This is second inning of a 9-inning game. That's where I think this plays out.
So fast forward a few years for us, fast forward to the end and what that view looks like. And this is something I've been asking everyone, Dan, because we're not just interested in the micro with these individual companies, but we're interested in the economic effects of this investment and the promise of this technology. If everything goes according to plan, what does it look like if these investments are successful? What does that look like to everyday life? What does that look like to employment in the US and around the world? What are the effects of this tech on society?
Look, you and Carol, I think you'll be in a robo-taxi. I think the humanoid robots are going to be something that over the next 4 or 5 years are going to become a reality. And I think it's going to be a massive innovation renaissance in the United States. For the first time in 30 years, the U.S. is ahead of China with tech. And that's massive in terms of as this all plays out. Will there be job losses? Yeah, but I think net, it's jobs created, innovation, AI centers, manufacturing. There's more data centers under construction today than active data centers. So that's my view why this is a fourth industrial revolution. And we continue to view days like today, they don't feel good, but they create the opportunities.
You know, you talk about the AI build out, and we are, increasingly doing stories about a data center built, but they don't have the power to power it. It's funny, but not funny. So, and I do think about, also the political impact of Americans, myself included, paying super high electricity prices right now. And, the pushback where we had a guest, was it yesterday, that was talking about, you're going to have a point where Americans are saying, nope, you can't build this data center here. Like we need lower electricity.
Yeah, Connor Sen in Bloomberg Opinion.
Connor Sen, thank you. So I just do wonder, Dan, it's going to have some challenges. Already it does.
Nuclear.
Yeah, but that's not going to happen overnight. You know that.
And to be fair, Connor was joining us from Atlanta, and that's where in Georgia is the state that has the most recent new U.S. nuclear reactor, the Vogtle 2 plant, the first one that has been built in 10 years, basically. And that was open just a couple of years ago. And still, he and his neighbors, they're seeing electricity costs soar.
Look, and that's something where, that is the reason right now, from a power situation. The only thing stopping the AI revolution is power. 3% of companies have gone down the AI revolution. When you get to 20%, power starts to be a massive shortage. But I believe nuclear fusion, enhancements on the grid, solar, going to be an all-in sort of hands-on deck that you're seeing in the U.S. on power. Aqua obviously being one of our favorite names and others, but that's my view where you're going to see really a massive surge of focus on investment in technology to enhance power in the United States.
Well, always appreciate it, Dan. And thanks for being so patient as we went through some of those tech problems. Dan Ives, Global Head of Technology Research at Wedbush Securities. The irony.
Got to do some research into the Wi-Fi. No, it's that hotel Wi-Fi. That's what
always
happens.
the Wi-Fi. Hey, listen, we've got a sell-off on this Thursday. S&P down 1.4%. NASDAQ 100, a decline of 2%. You're listening and watching Bloomberg Businessweek Daily.
$240 on Wall Street. I'm Amy Morris. Now that the government shutdown is over, traders waiting for economic data that may or may not give the Fed more information to allow them to cut rates next month. And that's pushed stocks lower. We check markets for you all day long at Bloomberg. The S&P 500 down 1.6%. NASDAQ down 2.3%. The Dow down 1.4%. The 10-year Treasury yield at 4.09%. The 2-year yield at 3.58%. Bitcoin now down. Let's look. Now down more than 3%, dipping below 99,000. Oil inventories rose by 6.4 million barrels. That's the highest since early June. Now Brent crude is about 0.7% higher, and WTI about 0.4% higher. National Economic Council Director Kevin Hassett says the October jobs report will be released without a reading of the unemployment rate because the household survey, which produces the unemployment rate, wasn't conducted in October because of the government shutdown. Verizon layoffs are coming next week as new CEO Dan Schulman takes charge charge. There could be 15,000 cuts next week. That's according to sources who spoke with Bloomberg. Most of those would come through layoffs. Verizon has lost crucial postpaid phone subscribers for 3 consecutive quarters. Shares of Verizon more than 1% higher now. Unionized Starbucks baristas are launching a wave of walkouts, a work stoppage they say could grow to become their biggest strike to date. The strike involves more than 1,000 workers at more than 60 cafes. The union says these protests are open-ended and could expand if there isn't any progress toward finalizing a union contract. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Businessweek Daily with Massar and Tim Stenovec.
All right, Amy, thank you so much. You are listening and watching Bloomberg Businessweek Daily. Massar, along with Tim Stenovec, live here at Bloomberg headquarters in New York City. We want to get to our weekly segment, Business Week Women's Health segment, where we focus on key issues in developing technologies impacting the present and future of women's health around the world. And a lot of times it's women's health, but also even more generally, a look at major health issues. And this week, though, definitely pertains to women. We're talking about hormone replacement therapies used to treat menopause symptoms, no longer needing to carry strict warnings about some potential side effects, including cancer and heart disease. That came from the U.S. Food and Drug Administration earlier in the week. Actually, on Monday it came. So we wanted to get to a voice that we've talked to before, and it's great to have her back with us.
Dr. Fanny Elahi is Associate Professor of Neurology and Neuroscience at the Icahn School of Medicine at Mount Sinai. She joins us from New York City. As Carol mentioned, this week, the FDA said it would remove the black box warnings from HRT products. The last time you were on the show with us, you said HRT may actually help diminish women's risk of dementia. What are your views on just the warning or the changing warnings coming from the federal government on this? Net, a good thing?
So I want to qualify that statement by I hope that it will diminish the risk of dementia. I am delighted by the fact that this warning that I and many others think was never warranted was finally lifted. It's sad that we lost 2 decades. And during this time, many women did not get the chance to go on hormone replacement therapy due to the fear of the side effects that were not indicated. But I think now we need to make up for the lost time and advance the science to the point where we are more precise with our predictions.
Why were those statements there in the first place? If we go back in history, you said we lost, it's unfortunate that we lost 20 years of treatment here. Why do those come around in healthcare in the US in the first place?
It was unfortunately a flawed design. Hormone replacement therapy was started for women who had gone through menopause in their 50s, and it wasn't until mid-60s that hormone replacement therapy was started. By then, it's too late. The physiology has drastically changed. A decade has gone by, and the impact of hormones may no longer have the impact on the health span that we need them to have. And then you just deal with the side effects.
Wait, so I'm confused. So you're saying not as dangerous? So, and what a shame that women weren't allowed to use them earlier because there were these concerns and warnings on it?
Right. So what I'm saying is that the timing of the hormone replacement therapy that was tested in the WHI, the Women's Health Initiative study, was wrong. Timing of treatment is really critical. This is not just for hormones, for any kind of treatment. You cannot wait years when disease has truly evolved, where the physiological state is different, and then test the impact of your intervention. It's like having a treatment for Alzheimer's disease for the early, most maybe even preclinical stage of disease, but waiting until full-blown dementia to test it. This is no different.
So,
hormone replacement.
Yeah. Well, so Dr. Elahi, when should women start talking to their primary care physicians about hormone replacement therapy?
Right around menopause. It's really, really important. And this is really a point that I hope people hear and start doing. When people are thinking that there may be perimenopausal, that's when the conversation starts, or even before, as you're preparing to approach the age at which you may go through menopause. or early post-menopause. We don't actually know how many years can go by before you start hormone replacement therapy. We definitely know a decade is too much. And I would say as early as possible is probably the smartest move.
Wait, so let me go back to, because I do think it's safe to say, as a woman, like there has been that fear when it comes to hormone replacement therapy. So the concerns about cancer, heart disease, that's just not a reality?
There is one kind of cancer that can, the risk for which can increase. That's uterine cancer if people are taking only estrogen. This is an important point. If women are considering to take only estrogen, they need to be aware that they need to get very close monitoring if they still have their uterus. But most hormone replacement therapy are combination pills. The risk of heart disease, that was just because these were older women. And the formulation that was used, the route, would also matter. Oral estrogen therapy can increase the risk of coagulation and perhaps other things. So route of administration matters, timing of administration really matters. And I would say that we are actually still in the dark with regards to the duration of the administration. That's a really important question remaining to be answered.
So what should most women be asking themselves right now in regards to hormone replacement therapy?
They need to be having the conversations with their providers and think about the providers would need to be thinking about each woman on an individual level. Mm-hmm. There are pros and cons to every treatment. And hormone replacement therapy in general no longer are considered risky. And in fact, we think could be really beneficial in the right clinical setting. If someone has a really high risk for various kinds of cancers, that would need to be taken into account. And the kind of hormone replacement therapy that is being administered would need to be investigated very closely. Women in general are at higher risk for various kinds of cancers, so the routine screening and care does not change. The fact that getting hormone replacement therapy after menopause increases, independent of any other risk factors, your risk for breast cancer is no longer true.
Interesting. I know we're not supposed to do this, but will you be my doctor? No, it's
I would be delighted.
Okay.
But I'm a brain specialist. I will take care of your brain.
Okay.
I
need help with that.
We only have about 30 seconds left, but I do want to know why you think hormone replacement therapy is having a moment right now after so many years of it being questioned by medical professionals.
I'm really delighted because I think we live in an era of precision medicine. And this is one of the many changes that I hope to see implemented in healthcare, where we design the studies really well. But I hope that in the future, we don't make conclusions on group levels anymore either, and that we have biomarker strategies. This is what my lab is really focused on, to make treatment precise for that given individuals, to decrease their risk and to maximize their benefit.
Will you be all of our doctors? So appreciate it. Already looking forward to next time. Dr. Fanny Elahi, she is Associate Professor of Neurology and Neuroscience at the Icahn School of Medicine at Mount Sinai, joining us right here in New York City.
You got to make sure she accepts your insurance.
I know.
You didn't check.
This might be one you pay out of pocket for. I'm just saying. All right. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, just a quick check on the markets as we have seen a bit of a sell-off today, although, yeah, we're bouncing near our lows of the session. What does that mean? Down almost 1.7% on the S&P 500. Dow Jones Industrial Average, it's down about 1.5%. And if you take a look at the NASDAQ 100, that is taking the biggest hit on a percentage basis, down about 2.2%. So those tech names definitely weighing on the overall trade. Just a quick check on the S&P 500, Tim. Most names, 347 to the downside, but not everything's down. 155 actually gaining ground today.
Well, we are just about 3.5 minutes away from potentially seeing Blue Origin make another attempt at a launch from Cape Canaveral, Florida. This of its flagship New Glenn rocket. The mission seen as a crucial test for the Jeff Bezos-backed space company in its quest to challenge SpaceX. It's scheduled to launch. That launch time was pushed back several times before Blue Origin ultimately called it off due to the weather conditions and unspecified ground equipment issues.
That was
earlier
kind of
this week.
Yeah, we've seen it, I think, was it Sunday, also Wednesday, we've seen some pullbacks and cancellations.
And if you're watching us on TV or on Bloomberg Originals or on YouTube right now, you can actually see the screen right now coming from Blue Origin. Once again, Carol, we're just about 3 minutes away from the scheduled launch.
Yeah, so we're keeping an eye on it. We want to walk you through it, and fingers crossed that it actually gets off the ground. Let's get to our guest, though. Keith Cowing is with us, astrologist and editor of NASAWatch.com. He is joining us from, astrobiologist. Did I say astrologer?
Yeah, I think,
get that.
you know, if we're looking for
one right.
If you're looking to get your sign read, we're in the wrong place.
No.
We're talking to the wrong guy.
Yeah, my lifeline's good.
I think it was spell check. I'm going to be quite honest with you because
That's like
I did a cut and paste. I'm just going to say
that happens. Yeah.
Astrobiologist and editor of NASAWatch.com. I believe you're in Reston, Virginia, correct?
Yes, I'm outside the Beltway, not inside.
All right, good to know. Hey, Keith, 2 delays already, right? Sunday and Wednesday. Remind us, what were the delays? Was it weather, mechanical? What happened?
Sunday was a weather thing that kind of went. It's Florida, and if you've been there, it's sun, and you can have sun in your face and wind in your back. And they took it right up to the last second, but the weather was just not going to cooperate. And then Wednesday, the big solar storm that's been hitting Earth really made it difficult to get spacecraft up there without worrying about them having problems once they're in space. So they decided to punt on that. The space weather's gone down a bit, so they're going to try again today.
Okay, so the significance of this attempted launch, the New Glenn rocket, potentially puts us, the SpaceX Blue Origin comparison that I think a lot of people make. It's tough because SpaceX is so far ahead of where Blue Origin is, but what would be the significance of a successful flight here?
Well, you look at the fancy, complicated logo that Jeff Bezos has, and there's a tortoise in there. So, it may be tortoise in the hair. And these companies have 2 totally different ways of doing things. But at the end of the day, you now have the two largest rockets on Earth ever, full stop. And if there's a third that NASA's built. So America has these 3 amazing launch systems that nobody else currently has. So that in and of itself is important. And we've learned that, having one way to do something in space is begging for problems. But if you have 2 or 3 ways, you have more flexibility. If something goes wrong in one place, another rocket can pick up. So it's good that we have more than one rocket.
All right, folks, we are, of course, talking to Keith Cowing, astrobiologist, editor of NASAWatch.com. Live shot of Cape Canaveral as we get ready for the launch of the Blue Origin flagship New Glenn rocket. This would be the 3rd attempt, and we're looking at about 20 seconds on the clock. This mission seen as a crucial test for Jeff Bezos' company. Let's listen in.
At T-minus 20 seconds.
All right, they're to hold.
Okay. We just heard
Wait,
a little.
Learn just a little bit more here.
Okay, a little hold on the watch, on the launch, and we've seen the clock stop at 20 seconds in the countdown. Again, this would be the 3rd attempt at a launch from Cape Canaveral, Florida.
Keith, why would a hold come at 20 seconds in a situation such as this?
A whole variety of situations, including maybe one reading is a little off, and the system, which is highly automated, says wait. And it's not uncommon that they'll say, oh, let's go, and they'll pick it up again. They may dial it back 5 or 10 minutes to give them more time to fix things. We'll find out. Either it'll start up again in the next minute or so, or they'll say it'll be 5 or 10 minutes. Hopefully, it's just something that they can solve while the rocket's filled with fuel on the pad, ready to go.
All right.
Go ahead, Carol.
No, please go ahead.
Well, we should remind everyone this is Unmanned. Keith, just in 20 seconds, the promise of a launch, a successful launch like this, very briefly, and the future of this particular craft carrying people.
Well, first of all, this is the 2nd flight of a giant rocket. The first one was pretty good, but you got to test this thing, and the only way to really test these things is to launch it. But NASA got a bargain in having 2 of these. You can see them if you're watching the feed.
Right.
These 2 Escapade satellites that are going to Mars.
Right.
So NASA got a bargain out of this.
Okay.
It's a low risk. Okay, we're not counting.
Yeah, we're going to have to actually jump in. We're going to keep watching this. Keith, we've got to jump in. Keith Cowing, thank you so much. This is Bloomberg.